Alright everyone, welcome to Thursday's live stream. I know we missed out on Tuesday's live stream, but we are back. Alright, so hopefully you guys can all hear me correctly. Let's see, and let's check the audio here. The replay to make sure everything sounds perfectly fine with the audio. Okay, I think we're good. What's up, guys? Hello, hello. I'm not gonna begin right away. I just want people to be notified a little bit more. Hey, 7 likes. Wow, what's up, guys? What's up? What's up? 7 likes before we even began. I mean, that's great to see. Hey, what's up, guys? More people coming in. Welcome, guys. For everyone who just joined in, as you guys know, my streaming software was not working. There was a huge technical problem and I was able to figure it out in the nick of time today. I took a couple hours to try to figure out what's wrong, and I finally got down to the problem, and the problem was solved. So thankfully, I was able to do that within like maybe 2 hours before the stream time. So thank God we can do the stream tonight, because I have a lot of, well, not a lot, but I do have some very important things to tell you guys that you should be prepared for in an upcoming few trading weeks. Okay, so let's begin. Okay, let's begin. I see you guys' reactions there in the live chat. What's up, guys? Hello, hello. Alright, so without further ado, as seen on the actual title of the stream, right, something is about to break. Warning from VIX, right? And I posed a question here that I want everyone to look into, right? And the reason why I've said this, I've titled the stream, is that, well, something is happening under the hood of the markets, right? Hey, welcome, guys. You guys are just in time. Come on in, come on in. Make sure you guys hit that like button down below. I just began, so you guys aren't missing out. Okay. You're long on VIX. Hey, Danny, what's up? What's up? My call expire November 20th. Hey, that's some good time too. So if any of you guys are new here, make sure you guys subscribe as well, and obviously hit that notification bell to know when I am live and when I have uploaded a new video. And if you guys want to take a look at my new most recent uploaded video on the channel, just go ahead and take a look at the description box down below. It's the very first link provided in the description box, or just click on my channel. It's easy as that. I know you guys know how to use YouTube here, so but again, let's go right back to the VIX. So the reason why I'm looking at the VIX, okay, it's a bit of an ambiguous reason. So don't take my words too harsh seriously. But okay, we are heading into possibly one of the more volatile trading sessions in the next couple of weeks, between post OPEX week, which is going to be next week after tomorrow, and in between November presidential elections, right? So November 5th. So from October 18th, I would say starting next week, so that will be what, October 20th, okay, excuse me, October 21st, okay, through November 5th, we're gonna have some volatility, okay, and we tend to see that as we head into that transition from October to November, or basically the first month of quarter 4 to the second month of quarter 4. And we've seen this happening last year. However, we have a complete different trend that's been going on since last year, because last year we had an intermittent topping textbook correction of slightly over 10% from July, I believe, to around October, right? October bottom. And I even told you guys last year, if you guys remember, around I think mid-August, I told you guys that we should be seeing a market bottom forming between the transition of October to November, and we got exactly that. And I remember we even went short on the US dollar, I believe the day before Halloween as well, and that worked out really well, and it was a very good long position to hold. And we also knew that the markets would be bouncing, and guess what happened? We saw the markets absolutely rocketing higher into the end of this year from the October's lows all the way up into December highs. And so now, here is where things are different for 2024. Right, what we have here is essentially, hey, what's up guys? Welcome in. Wow, make sure you guys hit that like button down below, guys. So I just began, guys, but if you guys missed out on a couple of minutes here of what I've said so far, make sure you guys watch the replay at the end, okay, once the stream is over. So what happened here is that so far since July, we did make a similar top here. However, we've gotten very quick corrective dips, as you guys should know by now, on every single first trading day and first trading week of each month since August. And every single time we've had this small corrected dip, it was bought up. Buyers continued to defend every single support level that we have seen. And everything that I've provided you guys so far, every one of these technical levels that I've told you guys to watch out for, has been used by the broader group of buyers and bullish traders and investors, and we continue to trudge up higher. Now, since we are seeing an opposite trend happening here, where we're already in an uptrend while we're heading into this period of uncertainty and volatility. Now, before I move on here, I really want to remind you guys that the market hates uncertainty, right? And uncertainty breeds market ball expansion. I've stated this multiple times, long time ago as well, maybe a couple years ago, right? A few years ago. And so this is the reason why I'm saying that something could be breaking here. And what could that be? Well, the uptrend, right? So we're currently in an uptrend that could potentially be breaking to the downside because we have a period of uncertainty that should be breeding an expansion or growth of market volatility. Now, can we see that on the S&P 500 volatility index? Well, in my personal view, and again, this is kind of an ambiguous analysis. Others will take it in a different light, in a different way. We are seeing a potential setup in the VIX. So after August's wild, it's even wilder than just saying wild. This amazing big pop in VIX here. We've essentially continued to hold at highs here as we consolidated. Yes, we moved lower. Yes, we made lows here after this huge pivot down from August highs on the VIX. But the VIX has continued to stay at near the 20 value, right? And whenever the VIX is at the value of 20 and it consistently tries to stick to this value of 20, that doesn't bode well for the near-term future, in the very short-term future. In the long-term future, it won't matter, right? But it seems like there has been a little bit of a shift, paradigm shift, as to where we're starting to see some basic market consolidation occurring, and that's where VIX comes in, and VIX is staying at this value of 20 to consolidate with the markets rather than looking for like the value of 12 to 15, for example. That's what we saw for most of 2023. And so the fact that we're seeing a kind of a different shift in where the VIX is starting to quote unquote consolidate by staying near closer to 20 and a little bit even over 20, but I would say a valid range to be looking at for the VIX to be concerned about will be around 18 to I would say like 22, and that's exactly what we've been doing, right? So if we continue to do this, there will be more opportunities for the VIX to expand and for the markets to feel that expansion and correct lower. And especially after OPEX tomorrow, it's going to be probably a very good time to start taking profits. And I've even given my CFO Swing and Watch Report readers and private CFO Discord members some very, very good hedges that we entered in yesterday to prepare for. And I believe even today, I know we did today, using specifically, I'll give you guys stickers here, VIXY VIXY and SPXS, right? Those are the inverse ETFs, right? Leveraged inverse ETFs, and obviously VIXY is a play on VIX. And so yesterday, I believe it was yesterday or even Tuesday. I think it was Tuesday here. Let me make sure I get the dates right. Yeah, so Tuesday we opened up another layer of hedges here, right? No, it was October 14th, so Monday. So we opened up SQQQ as well, right? Because I wanted to make sure that what I was seeing in the VIX could potentially lead into this potential corrective dip into the kind of market uncertainty between post-monthly October's OPEX and hey Danny, you said, are you long SQQQ? Yes, obviously. I forgot to mention that, so thank you, Danny. So I am long SQQQ, right? And I'm also long SPSX, right? SPXS and SQQQ. So this is the inverse of S&P and NASDAQ. So thank you for mentioning that, Danny. So I'm also long VIX as well because I'm expecting that market volatility to expand, right? So to me, this pattern here, this wedge that we're forming on VIX, as we're sitting at lows here, right? It's a bit concerning, right? However, again, I am expecting this period of volatility after such a great month of October so far. Yes, there was that kind of weakness, but it ultimately ended in sideways, which I've also explained to my CFO Stream and Watch readers that the most ideal scenario will be for us to move sideways for October, but we got even better than that, right? We actually got a new uptrend. And well, not even a new uptrend, we just continued. We just continued to ride the daily 10 SMA, my red line here, and the daily 21 SMA, and we hit new all-time highs. And we've gotten even closer to my wild target of the S&P 500 sitting at $600, or even the S&P 500 index at 6,000. So again, I've been in S&P 500 for that target here. As all my readers and members know, we have some verticals that is targeting that end of the year $600 target for the S&P 500. So we have no worries there from the longer term perspective. But for the shorter term perspective, even today, right, if you take a look at the S&P 500, we continuously make a rising wedge here. Right, we're making a rising wedge. This is a fact. We're making a rising wedge here. Just drawing here for you guys, but I wouldn't be surprised again. Post OPEX, which is tomorrow, we see some profit taking happening as we head into the weekend and ultimately into next week, where we'll most likely see some increased volume, but overall still lower volume. But as we head closer and closer to November elections, the overall economy, the overall stock markets, and every single equity market will be experiencing that uncertainty. And again, uncertainty breeds market volatility. So hey, welcome guys. Thank you guys for the likes. Let's make sure to get to 10 likes, guys. That's always been the goal here for every single stream. So if you guys are really just liking what you guys are hearing, if you guys are understanding what you guys are hearing, most importantly, and if you guys think that you guys can apply what I am saying to your own trading strategies and your own trading accounts, make sure you guys hit that like button down below. So overall, simply from the S&P 500, now this is less ambiguous compared to what I've shown you guys on the VIX with this wedge, but in this sense here, there is a good chance we can at least retest the previous all-time high level at $574.50, right? I'm giving you guys this in the then private but now public CFO Springer Watch report technical analysis videos. I mentioned this a couple times in those videos where I talk about the 574.50 all-time high resistance level and the $563.50 previous all-time high levels being very, very important. And so if we do get a pullback from this post-OPEX to November elections kind of weird in-between trading weeks, there's a good chance that we can still see a pretty good dip, a solid dip, where we might even end up having a pretty flat performance for October. And I even said this in a couple of reports, I think it was like 2 weeks ago, that we should be expecting at least kind of the most ideal scenario for us will be a sideways month for this October of this year. And so even if we come back down to retest 574.50, I wouldn't be mad if we just move sideways. Or if you see a little bit more market volatility expanding, right? I wouldn't be surprised if we come back down and we hit 574.50, we don't hold it, and then we come right back into that range that we saw from mid to late September to early October by just simply consolidating from 563.50 to 574.50. Now, I have erased this, I think this week on Sunday when I was making the report, the CFO Swing Watch report, but I want to put it back here, right? So the most ideal scenario for us, if we do move back down, will be just simple sideways where we end up pretty much flat for the month of October, because that can provide enough fuel once November presidential elections are over for everyone to just, have a sigh of relief and be able to put their cash to work, right? They can actually allow their cash to work by making investments once more, making active trades once more to the upside. And why am I leaning biased to the upside? Well, I mean, take a look at the overall performance of the S&P 500. Keep it simple. What have we been doing, guys? We've been moving straight up. We've been moving to the top right corner on the charts. So every single dip has been bought so far, right, since Q3, and ever since, well, this entire year. So like I've said a couple of reports back as well, buy every single shallow dip, and that's exactly been working out for us. That's literally the statement that has been helping us stay on course with what the markets have been doing. So with all of this being said, right, I am still thinking that something can break here, at least the short-term uptrend, literally the short to mid-term uptrend. That is the something that I'm referencing to that could potentially break. So now what can we do here, right? What can we do here? Well, just like I've advised my CFO Swing Watch report readers and my private CFO's Discord members, which are the same, just making sure you guys know what I provide for you guys, what services I also have. So if you guys are interested in that, please DM me on Instagram at ChartsFocus1, which is my handle for all of my social media platforms that I'm on, like Instagram, Twitter, YouTube, Facebook. Make sure you guys DM me on Instagram specifically at ChartsFocus1, and you guys will be provided with a 50% discount code for your first 30 days to become a CFO Swing Watch report reader. Okay, so take this opportunity to join us. So all of my members, all of my readers, they were able to grab some very, very good hedges so far for this entire month. We've been absolutely on point with those hedges. Now, did we take profits on some hedges? Yes, we did. Did we allow them to just sit there and maybe even go to zero? Yes, we did. Why? Because hedges are insurances, right? You want to make sure that you don't want to use it, but if the time comes to be of those hedges to become of use, then you're glad to have them, right? And so again, hedges are not meant to be specific trades, but hey, if the hedges worked out and you want to take some profits, you want to take it all off the table, you can. Just remember that the initial objective of those hedges are to be used as insurances in the event where we see, like for example, in the next couple of weeks, if we see market volatility expanding and we see the markets moving lower as people take profits on the longer term positions, we will need to keep those hedges, because I still believe in the mid to longer term perspective that we will continue to run up into end of year, right, until the end of fiscal year 2024 and into the first couple of trading weeks in the fiscal year of 2025. And I'll be getting into a lot more detail of what that means, of what I'm saying here, in the future CFO Swing Watch reports. And so if you guys want to know what that is, make sure you guys DM me on Instagram at ChartsFocus1. Okay, so now today I provided with SPSX, right? SPXS, excuse me, I think I said that correct. Yeah, SPXS. I don't know why I always switch that last two letters there. SPXS. So we went long on that one. If you guys want to know the exact contracts, make sure you guys join us so that you guys can become a reader and become a private CFO Discord member as well. So we took those, and we also took VIXY, Big C calls. Now, I usually look at UVXY, but I want to be a little bit different this time around. But UVXY is also shaping up to kind of look, it looks like it's basing here, and well, obviously it's following the VIX here, so it's pretty similar. But overall, you know, it's just a little bit more on the fact that we're seeing the VIX literally consolidating at a new range, right? Rather than seeing the previous, you know, ranges of you know, 12 or 12 to around 15 or 12 to 16 or 13 to 16, right? Rather than seeing those low values, we're seeing the VIX sitting around the usual correctional values, right? Where the market is correcting, right? Like around the value of 20. And so, you know, there are periods in the market in the past where we've seen the markets continuously moving to the upside in the longer term perspective, in the bigger picture perspective, even if the VIX was staying at the value of 20, right? Even if the VIX was staying at the value of 20. But that's a bigger picture view. What I'm trying to focus on in tonight, right? For tonight, we're focusing on the short to mid term. So in the weeks between, again, post OPEX, so next week, okay, next week, okay, so from October 22nd, I think I said 20, I think I said 21st. No, it is October 21st. So from the week that starts next week, October 21st, all the up into next week, okay, excuse me, next week. I think it's 3 weeks here. If I'm doing my am I counting the days right here in my head? Next. Yeah. So next week from now, okay. So from post OPEX to next week to November elections on November 5th, right? We should be seeing more profit taking coming in. And so that is the shorter to mid-term, right? Shorter to mid-term perspective that we're focusing on, rather than looking at the longer term perspective of the fact that VIX has stayed around the value of 20 while the market continued to march up higher. We've seen this happen before, right? So I wouldn't be surprised if that happens again in the future, especially once we start to see that dip buying coming in after November elections. And I've already stated this in I think in like mid-September, that we should be expecting some sort of a dip as we head into November elections, and I got into way more detail in all of my CFO Swing and Watch reports from that point forward. But hey, for anyone who's just joining in now, if you guys want to take a look at a sample of what you guys can receive every single Sunday night, I'm gonna plug this in for right now. Hey, I gotta give you guys what you guys are missing out, literally. This is something that has helped many people to really just be prepared every single trading weekend, and with the added on support from the private CFA Discord, people have been able to successfully navigate the markets, especially on a month like this, right? People came in into the month of October expecting something, and they were completely wiped out in the first few trading weeks. Well, the first few trading days actually, and now they're getting wiped out again as the markets move the complete opposite way by moving to the upside and making new all-time highs. However, we were already prepared, right? We already knew this will happen. So let me give you guys let's give you guys this week's CFA Swing and Watch report. Let me show you guys this, okay? Because I really want you guys to see what we have here, right? So to see what you guys could be having in your email inboxes every single Sunday night. So here you have it, right? So this is the newly updated CFO Swing and Watch report. So this is the volume 3 of the newly updated report, right? And so it's really just a really good top to bottom rundown of the markets, and obviously there's technical analysis and fundamental analysis on every single one of my swing trade ideas that I also put in this report. But it's a very, very thorough report that I put in. I'm the one that's doing the reading, I'm the one that's doing the research for hours on end on every single weekend, and I also take hours writing this, right? I know a lot of newsletters out there are now using AI, and I am never ever going to use AI, right? I really want to put in my own analysis, what I'm confident in, because I know how to do analysis, right? I don't need the help of AI to do analysis. And so again, This is all that I'm showing you guys here. This is literally the newsletter along with that private CFO Serial Watch report, technical analysis and video that I send in with the report, and that is always available and becomes public on the following Monday, right? So even the cryptocurrency pick, right? For this week, which was Ethereum. We were early with this as well, as I added right before that breakout over $2,500, and that's exactly what I wrote here. Right, I have recently added right around that $2,500 level that the price is currently consolidating under. Let's see if it can retest that 3,000 level soon, and possibly those peaks from March and May, right? March and May of this year. So this is kind of the the example here of what you guys can be receiving, right, every single Sunday night. So make sure you guys DM me on Instagram to take that opportunity. Just take that first step, and don't be afraid, and just take the opportunity of getting that 50% off for your first 30 days. All right, so if you guys follow me on Instagram, you guys know the reviews that you guys can see on my own Instagram page by looking at one of my highlights. There's a bunch of highlights that you guys can choose to look at, and you guys can take a look at the reviews and also the profits as well. So we are always striving for bigger profits and smaller losers, right? That's kind of the core values, I would say, of trading, right? We want to keep winners big and losers small. Okay, and then you said if you have time, could you talk about your idea of SQQQ long trade, strike price, expiration date, etc. I've been long on VIX but not SQQQ. It seems very reasonable after listening to you. Yes, of course. You know what? Let me actually give you guys what I sent to my readers and private CFO Discord members. So on Monday, excuse me guys, on Monday. Let me scroll up here. On Monday, this is exactly what I said. I'll read it to you guys here. Okay. Right. So I said SQQQ hedge trade, $7 strike call contracts that expire on November 8th at $47 per contract. And this is the second layer to the first hedge position that we had on SQQQ a couple weeks ago. Okay, and I said this as well. Just starting to have more protection as we head into OPEX and closer to elections on November 5th. And I said set and forget about it. All right, that is literally the only thing that you guys can do when you're putting on a hedge trade. You set and forget about it. You execute the trade and you forget about it. Why? Because it's insurance. Think of it like your car insurance. Do you ever want to get into an accident? No. Right? But when you do, right? Out of the blue, if you do get into an accident, you would be happy that you have insurance, especially if someone else hit you. Right? But even then, even if it might have been your fault, right? It's a good idea to have insurance. It's the same type of thinking and logic when it goes into the overall markets and overall trading. So that SQQQ, it's something that you guys should be looking at, because what did I tell you guys a couple of weeks ago as well, right? I've literally given you guys so much information that you guys can use by accumulating the knowledge that I've given to you guys and formulating a very, very good, precise outlook into the markets a couple weeks out, or maybe even a few months out, just by listening to my streams and the private but now public CFO Serial Watch report technical analysis videos. But then again, you guys can always get even more information to the things that I actually research, analyze, and actually write down on every single report every single Sunday night, right? So QQQ, why are we long SQQQ, right? The inverse of QQQ, right? So let me actually even just show you guys SQQQ. Danny, thank you for the question as well. All right, so this is the Pro, Ultra Pro, short QQQ, right? So people just know it as inverse QQQ because that's kind of what it is. I'm not gonna make it more complicated than that. I know people will say, "Oh, Andrew, you're wrong," but you know what? I'm just gonna use this. The only thing that I'm using this for is for a hedge, right? I'm not gonna go into, wow, what is this? You know, what is this ticker, or what does it really do? You know, I don't want to do that. I don't want to deal with any of that. I'm just looking to use this as a hedge. Okay, so with QQQ, we know that we have been seeing the overall market breadth or market internals or overall internals of NASDAQ lagging, right? We've seen it lagging behind the S&P 500 ETF. I've shown this comparison multiple times in the report and also in one of the report videos, technical analysis videos. So make sure you guys go back to my channel once the stream is over and take a look at my videos. I really highly recommend you guys to watch my videos. If you guys have time, if you guys are driving, if you guys want to listen into something, listen to my videos. I mean, people are always coming to ask me, you know, hey, where can I listen more on trading stuff, right? Trading knowledge. Where can I learn some basic stuff? Go to my YouTube, which you guys are on right now. Go to my YouTube channel, or simply follow me on Instagram as well and watch my stories every single day. I've been saying the same thing for the past 3 years, right? Everything is here for you guys to literally understand and master the fundamental basics of trading. I've been giving you guys this every single time. Right, so it's every single day, literally. So QQQ, as I've mentioned a couple of times in the past, like couple of weeks, has been lagging compared to the S&P 500 ETF. And so with this lagging component to the overall NASDAQ here, it makes sense to me that we need to take SQQQ, right? And that's the reason why we have a second layer here on SQQQ that we took on Monday. Because if the markets begin to correct, if we see some more profit taking coming into mostly major tech leaders or just overall leaders, which happens to be tech names, technology names, right? They have the biggest market cap. These individual mega cap tech stocks have the biggest market caps in the overall markets. If they begin to move down because the markets move down, and that is the S&P 500, the benchmark market, the NASDAQ will most likely react a lot quicker compared to the S&P 500, which means we can see NASDAQ leading the move lower, which is the reason why we saw, for example, here's a great example. We saw NASDAQ moving down a lot more compared to the S&P 500 from the top of July, the peak of July, to the bottom in August, early August. So we had over 50%, 15% correction. And then for SPY in August, okay, I believe it was almost similar, but I think it was like 11% or something like that. No, I think I got that wrong. Yeah, so it's almost 10%, right? So the actual move was a lot deeper on NASDAQ itself. And again, with this SQQQ position, it is a hedge. If we do see a similar rapid move down as we head into November elections, and once that uncertainty kicks in and we see that market volatility expanding, that market vol expansion, we will see SQQQ rapidly moving to the upside as it completely has an inverse relationship to NASDAQ, especially on very volatile moves lower on QQQ. And a similar thing can be said for SPY, ticker symbol SPY, and SPXS, right? And this is the S&P 500 bear 3 times leveraged ETF, right? So again, same thing here, same logic, right? Same analysis compared to SPXS and SPY. So that's kind of my overall thesis, and just a very simple analysis that I want everyone to use when we're looking at hedging, right? When we want to hedge our long-term positions, right? For example, one of our long-term positions is over 400%, right? And we want to hedge against potential move down. We want to protect ourselves, protect those gains, right? The most ideal scenario, and the most ideal scenarios that we've been getting since this month began, was literally either a flat day or a very small red day. And that's the most ideal scenario we want to be having when we are hedging. And that's the reason why we hedge. Does that make sense, guys? Right? We're not hedging to simply trade, right? If you guys don't have any long-term swing or position trades or even investment positions, fine. Use these SPXS, SQQQ, all these leveraged inverse ETFs. If you want to use them as simple trade ideas for a potential market correction, good, use them, right? But in our case, when we are already long and we are really deep into profits and really deep in the money with some option contracts on certain positions, which I can say to you guys will be able to figure that out when you guys become readers of the CFO Swing Watch report and members of the CFO Discord. Then again, okay, you guys have that 50% off discount code that you guys can receive if you guys simply take the time to DM me on Instagram at chartsfocus1. Okay. With all that being said, right, it's essential that you guys understand where we're coming from, why we're doing this, right? Why are we hedging, right? Because we want to make sure that we're protecting the longer term profits that we've had so far, while at the same time, we will book some profits here and there while hedging so that we can have some good protection and be able to even grow our cash, right? Because eventually, I would love to have an ideal scenario where we're able to book in profits from those hedges and also use those profits to put back right into the long-term positions that we were already looking at once the market pivots. Does that make sense? Right? And that's exactly what we've been doing essentially for the entire month of October so far. And all my members who are currently watching now will tell you that we've been absolutely on point with the navigation and guidance for this entire month and the entire first trading weeks of Q4. Okay, so Danny, if you're still here, hopefully that answered your question. I know you might have expected more of a complicated answer, but no, it's not complicated. Right? People love to make things complicated to sound, to just simply sound like they're having I'm not trying to be mean, but like people make things complicated when it shouldn't be, right? They just want to make it sound like they know what they're talking about to make sure that the analysis is completely sound. But I know I'm being a bit biased here. I know that, right? Everyone has some bias, because if you don't have any type of bias, then how can you trade? How can you take on risks, right? So hopefully that makes sense, right? I mean, literally, the reason why the markets move up and down and have these oscillations throughout different periods of time is that people have biases. They want to take shorts, they want to be long, right? There's two groups that are constantly fighting back and forth, right? Buyers and sellers, bears and buyers, right? Bears and bulls. So, in that event, right? In that event, we do see a big move down from October, from I guess I would say mid to late October to early November. We will be protected, right? Because we did the right thing by choosing to not be complacent, right? By simultaneously booking some profits on our long-term positions that have given us triple-digit percentage winners so far in this month of October, while others are being completely slaughtered, right? And at the same time, we're also silently grabbing these hedges to be prepared, because preparation is key in the stock market. Does this make sense, guys? Hey, wow, 13 likes. Thank you guys so much. You guys are great, guys. You guys are awesome. And Danny, I think you're a new member here. You're a subscriber. welcome. Thank you for subscribing tonight. Hopefully you're able to watch my other videos, and hopefully you're able to join us for these weekly Tuesday and Thursday live streams. Okay, so just as an overall summary for anyone who's still coming in right now, you guys have missed out on a lot of important things, but as a quick summary, based on my title, okay, this is the answer. That's something that could be breaking is the short-term uptrend that we're seeing right now in the overall market. Okay, and in the most ideal scenario for us in the next couple of weeks, from post OPEX week, so again, that's tomorrow, which is the October monthly OPEX, to November elections, okay, is that we move sideways and we ultimately end up having a nice, basically flat performing month of October. And that's the most ideal scenario. Now, in the case that we don't get the ideal and we get a little bit more the realistic, where we see the markets moving lower and not finding any type of buyers during this awkward period of market vol expansion, and we see VIX rising up higher as it continues to stick around that sticky value, that magnetic value of 20, we could be seeing that potential 3 to 5% correction from the current highs, as I've stated right before October even began, and we can finally be seeing some good profit taking from our long positions and from other long-term investors, so that we can raise cash to be ready to buy back those long positions that we want to have, or add on to our long positions. And when we have the opportunity to, dollar cost average, for example, some long-term positions that we're looking to have and hold, as we are expecting, where our current bias right now is this end of the year run, right? So that is the overall big picture outlook for the overall markets, and the short to midterm outlook that you guys should hold in the back of your minds as we head into tomorrow, which is the monthly OPEX, and as we head into November elections. Does this make sense, guys? Hey, 14 likes. Thank you, guys. If that made sense, make sure you guys like this stream down below, and obviously you guys can show your reactions in the live chat room as I see now. Thank you, guys. That shows me that you guys are present and you guys are listening in. Okay, so now my apologies if I've been speaking very quickly. That can also be a great sign that I'm very passionate about what I do, which I really am. I genuinely am. So again, just as before I finish the stream here, I want to give you guys this opportunity to take a look at the CFO Stream Watch report once more. Again, you guys can be seeing this report every single Sunday night in your respective email inboxes, along with this week's technical analysis video. And also you guys can take a look at last week's technical analysis videos, and both of these two videos are public now on my channel. So again, this is your opportunity, right? You guys can take a look at what we've been looking at. I mean, last week was absolutely an amazing week too, as we saw both of our swing trade ideas, UPST and on cart, completely smash our profit targets, right? And even this week, we saw SOUN, Soundhound, doing absolutely amazing by breaking to the upside, even though I still believe that SOUN still has a lot of room left to squeeze higher, okay? But again, last week's UPST, okay, cart, absolutely amazing. And this is an amazing swing trade that we took, right, on both those two tickers. Okay, so again, please check this out, right? If you guys want a link to this specific report from this week, DM me on Instagram, okay? As long as you guys DM me on Instagram asking me for the report, or maybe you guys, if you guys want to join, I will be sending this link and your personal 50% discount code for your first 30 days to join the CFO Stream Watch report and to become a private member of the private CFO Discord community. Again, my Instagram handle is at chartsfocus1, which is the same for every single one of my social media platforms. Okay? All right, this is your opportunity here. Literally an opportunity to see what we do, see why we have been navigating the market so well for the first few trading weeks of Q4. And maybe you guys can join us as we continue to navigate extremely well during this potential market bull expansion. All right. Okay, well, that is it for me tonight, guys. I really hope you guys have some very good luck tomorrow for tomorrow's OPEX trading day. And obviously, hopefully this video really helps out with the overall trading decisions that you guys have to make in the next couple of weeks as we head into November presidential elections. But hopefully you guys are able to understand why we have this current bias and current positions in the overall market. And hopefully you guys are able to understand and maybe even execute one of your own positions to hedge against your long positions, or maybe just use these leveraged inverse ETFs to your advantage here by going long on them and just getting a great swing trade or even day trades out of them as well. All right, so that is it for tonight. I'll see you guys back next week on Tuesday at the same time, 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Okay. And thank you guys so much for all the likes and all the views. We had, wow, we had 85 people in here tonight. Holy crap, we doubled the amount of people coming in. Wow, wow, wow. Amazing, guys, amazing. All right, have a great rest of your night, guys, and I'll see you guys next week. Thank you so much for joining.